Hello everybody, welcome to your market report. My name is Christian Charlo. Today we're Thursday, March 6, 2014. Today folks, I want to talk to you about a subsector movement that we had in the resources sector. Solar, steel, coal, and copper. So what I'm going to show you, I'm going to show you a list of some stocks that are breaking out and also the strategies that you should favor on those stocks though, because when we take a look at the market situation here, we don't have a market where the situation is clear that we might continue this bullish momentum with a lot of strength, because the subsectors movement that we have today, I think it's going to be determined, the continuity of this bullish momentum is going to be determined by the strength of the economic indicators. Tomorrow we're waiting for the employment report, and for the next few days we're going to have data coming out of China, data also coming out of the manufacturing activity in the US. So all those will, I think, play out to see how the strength of this bullish momentum could continue. So I think you should be cautious in your buying opportunities there, and also make sure you put your stop loss. That's the key word you should remember. Put your stop loss on your buying opportunities today. So first of all, the solar sector has actually been a sector that is performing pretty nicely. While it's maintaining its increase here, we do have additional breakouts in that sector, such as Celery. So it's a clear breakout. The only thing is it's already taking 13%. So a strategy that you could favor on a stock like that is to say, look, what I'm going to do, I love the technical pattern on that stock. It's breaking an important resistance. I'm just going to put stop loss if ever we lose all today's gains and we break all this former resistance. So 320 will be my stop loss on our Celery. So instead of putting a trailing stop loss at 320, you'll be around this area, and that's where you get rid of your positions on Celery. But by looking at, first of all, the stochastics, I believe the bullish momentum can continue. But also by looking at the MACD histogram here, we see that we're being in positive territory. The red line is above the blue line, which is also a bullish signal there. So I believe that Celery could be explosive. But the thing is, if ever you make a 5-6% in the next few days on that stock, you have to take some profit. It's important to be quick in your profit-taking opportunity on stocks like that. Hinkley Green Energy, same scenario, clearly breaking out too. Okay, there's a resistance that's there, but I believe if the bullish momentum persists, we could reach 822 on Hinkley Green Energy. So the thing is, if you're getting into a stock like that, where do you put your stop loss? Below all those former resistance, so around 640. This is where a stop loss should be put on Hinkley Green Energy. Are there other stocks to be watched on the solar sector if the momentum continues on the upside? Well, yes, there are. And the best stock I think that you should follow is Jazo, right? If ever it breaks 1111, that would be a great opportunity to get in on swing trading. And at Jazo, you have a target until 1262. Now, the copper sector, you see it has not yet reversed its downward trend, but we're getting there. We're getting at the edge of this downward triangle formation. If we do have a bullish momentum there that could allow the copper to actually reverse that downward trend, that will definitely be great. The leader on that sector is Tech Resources, which is clearly breaking out. But as I said, the continuity of this movement will be led by how the economic indicators perform, especially from China and also in the US. So I think Tech Resources, it's a first movement, could reach a target until 28, but could also stop around 26. So I think it's hard to tell. But if you want to be getting in on the first movement on that stock, there's no problem. But where should your stop loss be? If ever tech goes below that important support. So I would say around 23.98, 23.80 could be a reasonable stop loss on Tech Resources. So okay, it's a buy, but put your stop loss. First Quantum is a stock that is to be watched if the momentum continues in the copper sector. So at 22 bucks, this is where I will buy First Quantum. Now on the steel sector, same situation, almost same situation as the copper sector. So we might have a bullish cycle there until 46.81. That could be a reasonable target where we might have a pause or continue to reverse it. And among the steel sector, a stock that is doing the same technical situation as Tech Resources is United States Steel. Look at all that important support that also corresponds to that former resistance of 2012, right? So I think at this point here, United States Steel, even if it has not yet reversed its downward trend, represent a first buy, but your stop loss should be around 23.20 on United States Steel. We might reach that downward trend at 26.47, stabilize there, and maybe go up if ever we have good data coming out of the economic indicators. So I think it's okay to get in. 2320 should be your stop loss, but also you have to look at those positions to see how the economic indicators from China and from the US will be. And in terms of the stocks to be watched, there's AK Steel holding higher than 653. That's why I'll be a buyer on a stock like that, because it will also reverse this downward trend. So this is the list. The ones highlighted with an eye are the ones that are breaking out today, but where you should put your stop loss. So in the seller sector, you have those two stocks, Armageddon and Yingli Green. On the copper sector, you have Tech Resources that is breaking out. First Quantum has to be watched. And in the steel sector, United States Steel is breaking out, and AK Steel Holding has to be watched for an eventual breakout. But as I said, one thing to remember, if you're buying those stocks highlighted with an I, one word to remember, put your stop loss. So that's it, folks. This was Christian Charlo for MarketGurus.tv. You can have access to MarketGurus.tv for free for 10 days just by clicking at the link below. We cover all strategies concerning the stock market, and we invite you to also like our Facebook page and to meet us again next week for your market report. Thank you.